Hey everyone, it's your friend MWR here. We've all seen those crazy headlines about billionaires making fortunes overnight. It can be pretty frustrating, right? You're working hard, trying to grow your savings, while they play by different rules. Well, guess what? They kind of are. The top 1% control over 50% of the stock market's wealth. They use advanced strategies like options trading and hedge funds. For example, they often invest in private equity, which allows them to buy stakes in private companies. They also use leverage to amplify their returns, borrowing money to invest more than they could with their own capital. Today, I'll break down these strategies into simple terms. Let's dive in. Why do the top 1% seem to play a different game in the stock market? It's not just about money, it's about access to tools and strategies most people don't know exist. Imagine competing in a Formula One race with a regular car. You're simply not equipped to win. The same goes for investing. Billionaires use leverage, derivatives, and alternative investments. We'll break down 3 powerful strategies: options trading, hedge funds, and private equity. Their mindset is focused on continuous learning and networking. They have disciplined habits and strategic planning sessions. They also have access to exclusive investment opportunities and private consultations. Let's start with options trading, a strategy that often sounds more intimidating than it actually is. In simple terms, options are like coupons for stocks. They give you the right, but not the obligation, to buy or sell a stock at a specific price before a certain date. Billionaires love options because they offer leverage. Think of leverage as a force multiplier for your investments. It's like having a secret weapon that allows you to control a larger position with a smaller amount of capital. For example, let's say you're bullish on Tesla. Instead of buying shares, you could buy call options. If the stock price goes up, your options become more valuable. But remember, leverage is a double-edged sword. It can magnify both gains and losses. The top 1% use leverage in various ways, such as through hedge funds, private equity, and venture capital. Hedge funds often use leverage to amplify their returns by borrowing money to increase their investment size. Private equity firms use leverage in leveraged buyouts, acquiring companies with a mix of equity and borrowed funds. Venture capitalists leverage their investments by funding startups with high growth potential, aiming for exponential returns. By understanding and using leverage wisely, the top 1% can achieve extraordinary financial success. Next up, let's talk about hedge funds, those mysterious investment vehicles that seem to be shrouded in secrecy. In essence, hedge funds are like exclusive investment clubs for the ultra-wealthy. They pool money from accredited investors, think high net worth individuals and institutions, and use sophisticated strategies to generate high returns. Hedge funds engage in strategies like short selling, arbitrage, and leverage. One of the main reasons billionaires invest in hedge funds is diversification. Hedge funds aim to generate returns regardless of market conditions by investing in a wide range of assets. While hedge funds might seem out of reach for the average investor, you can still learn from their strategies by researching and investing in ETFs that mimic hedge fund tactics. For example, some hedge funds use algorithmic trading, which involves using computer algorithms to execute trades at high speeds and volumes. Another exclusive strategy is investing in distressed assets, where hedge funds buy undervalued or troubled assets with the potential for significant returns. Additionally, hedge funds often engage in merger arbitrage, profiting from the price differences before and after corporate mergers and acquisitions. Finally, let's talk about private equity, the realm where billionaires truly flex their financial muscles. Private equity involves investing directly in private companies or taking public companies private. The goal is to unlock value that's not yet reflected in the public markets. Think of it like discovering a hidden gem of a restaurant with amazing food, but not yet on the radar of most diners. You see its potential and decide to invest in it, helping the owners expand and ultimately increase its value. While private equity has traditionally been the domain of institutional investors and the ultra-wealthy, there are now ways for individual investors to get in on the action. You can explore crowdfunding platforms that allow you to invest directly in startups or consider investing in private equity ETFs. Unconventional investments like art, vintage cars, and renewable energy projects have also yielded high returns for those who spot their potential early. Now that we've demystified some of the strategies used by the top 1%, you might be wondering, how can I actually start investing like them? The good news is, you don't need millions of dollars to get started. It's all about adopting the right mindset, educating yourself and taking calculated risks. First and foremost, invest in yourself. Knowledge is power, especially in the world of investing. Read books, attend seminars, and follow reputable financial experts to learn the ins and outs of advanced investment strategies. Second, start small and gradually dip your toes into the water. Consider using a paper trading account to practice and refine your skills before risking real money. And finally, remember that investing is a marathon, not a sprint. The top 1% achieved their success through patience, discipline, and a long-term perspective. Set clear financial goals and create a detailed investment plan. Diversify your portfolio to spread risk and increase potential returns. Regularly review and adjust your investment strategy based on performance and market conditions. Leverage technology and automated tools to streamline your investment process. Network with other investors to share insights and learn from their experiences. Stay informed about market trends and economic indicators to make well-informed decisions. By following these steps, you can pave your path to investing like the top 1%. So there you have it, a glimpse into the world of investing like the top 1%. Remember, it's not about having millions of dollars, it's about having the right knowledge, tools, and mindset. By understanding strategies like options trading, hedge funds, and private equity, you can start thinking differently about your investments and potentially unlock new levels of growth. If you found this video helpful, give it a thumbs up, subscribe to the channel, and hit the bell icon so you don't miss out on more wealth-building tips. And don't forget to drop a comment below. Let me know which strategy you're most excited to learn more about. Thanks for watching, and I'll see you in the next video.